Okay, let's unpack this. You send over some material on the average directional index, ADX, right?
That's the one, specifically for trading the Nifty index.
All right. And our mission today really is to cut through maybe the complex calculations and figure out what it actually tells you.
Exactly. What does it say about market trends, trend strength, and, how it might be relevant for you listening?
Whether you're actively trading or maybe just curious about how market strength even gets measured.
Yeah. And the sources, they point out it's from J. Wells Wilder. Key thing. It measures the strength of a trend,
Not the direction. That's crucial.
not the direction. It typically uses like a 14-period setting, looking at the Nifty's daily high, low, close prices.
Okay, so we'll need to touch on the components, the plus DI and negative DI.
Yep, positive and negative directional indicators. And then the ADX line itself, it runs 0 to 100.
And those levels tell you different things. Weak trend, strong trend.
Exactly. Weak, strong, very strong, even extremely strong. And for Nifty, the material suggests above 25 is usually the threshold.
The point where you might say, okay, this trend has legs.
Right, enough strength to potentially consider trading.
So let's talk calculation, but maybe keep it simple. We don't want to get bogged down in formulas.
No, definitely not. But the basic idea is it compares today's price range with yesterday's.
To see how strong the upward push, the plus DM, and the downward push, the DAF DM, are.
Precisely. And it also looks at something called true range, TR, which is basically a measure of volatility.
Okay.
Then these bits, the DM and TR, are smoothed out, usually over 14 days, to give us the plus DI and ADI lines we see on the chart.
Smoothing.
Yeah.
Like averaging things out to see the bigger picture.
Kind of like that, yeah. Remove some of the daily noise.
Got it. So how do those lines, the plus DI, DI, and the main ADX line, work together?
Well, there's an intermediate step, the DX, or directional index. It basically measures the gap between plus DI and ATI.
So how much stronger one is than the other?
Exactly. Then the ADX line is a smoothed average of that DX value. It tells you the overall trend strength.
Okay, so if plus DI is above DI.
It suggests the uptrend has more force. If IDDI is higher, the downtrend is dominant.
But the ADX value itself confirms if that dominance is actually strong, like above 25.
That's the idea. ADX above 25 says, okay, this directional move isn't just random noise, there's real strength here.
All right. Let's translate those ADX numbers for the Nifty, 0 to 25.
That generally means a weak trend, or maybe no real trend at all. The market might just be moving sideways, ranging.
Not great for trend following strategies, then.
Probably not. Now, 25 to 50, that signals a strengthening trend. Could be a decent time to look for trades.
In the direction indicated by whichever DI is higher?
Correct. If plus DI is higher, maybe look for longs. If need DI is higher, perhaps shorts.
And then above 50.
Now you're talking very strong, potentially extremely strong trends, lots of momentum. Your example data showed what, 71.34?
Yes, 71.34, so that's firmly in that very strong category.
Definitely. A powerful trend was underway at that point.
Okay, so for someone maybe newer to this, listening in, how could they practically use this with the Nifty?
Well, the sources gave a pretty clear example. If ADX is over 25 and plus DI is above ADI,
that could signal a potential buy, maybe Nifty futures or calls.
Exactly. And you'd want a stop loss maybe below a recent low for protection.
And the opposite for selling. ADX above 25, but ADI is greater than plus DI.
That could suggest a selling or shorting opportunity, again, with appropriate risk management.
You mentioned the ADX line itself. The material also talked about its slope. Why does that matter?
Ah, good point. The slope tells you if the trend's strength is increasing or decreasing.
So a rising ADX line means?
The trend is gaining momentum, getting stronger. That might encourage you to stay in a trade.
And a falling ADX?
Suggests the trend might be losing steam, running out of energy. That could be a signal to, think about taking profits or tightening stops.
Okay, so ADX is great for trend strength, but it's not a standalone system, is it? The sources mentioned combining it.
Absolutely not. It's just one piece. Combining it with other tools is usually recommended. Things like
support and resistance levels.
Yeah.
Moving averages.
Exactly. Support resistance can help with entry-exit points. Moving averages can help confirm the overall trend direction. ADX tells you the strength of that direction.
And risk management, of course. Always important.
Always. Limiting capital risk per trade, maybe back testing how ADS worked on Nifty historically, that's all crucial.
Right. So wrapping this up, it feels like the ADX provides a really numerical way to gauge conviction.
Yeah, the conviction behind Nifty's price moves, it's not just is it up or down, but how strongly is it up or down?
It helps you sort of filter out the minor fluctuations from the real powerful moves.
It helps you try and see through the noise, yeah. An ADX above 25 is that first indication that maybe, just maybe, there's a trend with enough muscle to trade.
So for you listening, whether you trade the Nifty or just follow markets, ADX offers this lens on momentum. Remember that 25 level as a key starting point.
Understanding trend strength is just fundamental, really, to a lot of market analysis. ADX gives you one specific way to measure it.
So this deep dive gives you the basics of ADX as laid out in the materials. Here's a final thought to chew on.
Go on.
How might actually using an indicator like ADX change how you perceive market action day to day? Does it help you distinguish noise from, actual signal?
That's the key question, isn't it? Maybe check out some nifty charts yourself, overlay the ADX, and see how those values lined up with significant past moves. Could be quite revealing.